And good afternoon, everyone. I'm Michael Filigera. I'm with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 index future, the ES, for Sunday, April 25th, 2021. Well, Friday's activity, I'll tell you, took me a little bit by surprise, even though that I did leave it as an alternate. I did not feel that the buying would be as intense and push things all the way back up to the highs based on why it dropped and that news. I thought there had to be more people who were wealthy that wanted to get out of positions before they got smacked with higher taxes. Nonetheless, the market did race up, eked out a slight new high, and then declined in that last hour of trade on Friday. What we've been counting is an intermediate fourth wave correction. And within that correction, we have marked wave A complete at last Tuesday's early lows at 4,110.50. From that, we got an A wave up, and I've actually was thinking that it was going to be the ABC of a B wave. But as I've discussed in depth, and I will continue to discuss in depth, B waves are deceptive, are unpredictable, are crazy. And this is perfect example. This was a fairly orderly rise. And so it could have been all of the B wave or part of the B wave. But then we got last Thursday, a pretty strong decline, which was kicked off by news, which is often what happens in a C wave. It gets kicked off by news, et cetera, et cetera. So it came down. It had not moved to a new low below the A wave, so I could not consider it complete, but I considered it the start of the C wave, and then had placed some Fibonacci numbers down below, which still are valid. Now, what then happened is I had left it off that I was expecting lower numbers or lower prices on Friday, but I said, hey, stranger things have happened and B waves are very unpredictable, and therefore we could see an intense rise, taking us all the way back up to that 41.83 high. It exceeded it by a little bit, got to 41.86, excuse me, 41.8650. And then, like I said, declined in that last hour. So what I've done is basically, even though it's on there in this, it's penciled in A, B, C. If they continue to buy it and they take it above this, then I'm going to have to consider that it's in the regular B wave, which is totally within the realm of reality, and still expect that C wave. If not, if this just continues to power higher, then we're going to have to consider that wave C likely was here. This is B, C, and that fourth wave correction failed to create a new low, and were evidenced by the extreme push back in. The buyers just take over and they continue to push, and that would put us in an intermediate wave 5 up, which I will show you some Fibonacci's that go along with that. But let's assume right now that this completes the B wave, and now we've got a C wave down. I'm looking, C waves are always 5 waves, and therefore I would be looking for wave 1, 3, and 5 to be down, wave 2 and 4 to be up. They're corrective. And it should move below this level, 4,110.50, put in a new low. So what do we have? The first relationship is that wave C is equal to wave A, and that's going to come in at 4,113.25. Could that contain it? Absolutely. It absolutely can. And then it would be a failure. And what would be behind that failure is that the buying pressure is just too intense. The buying pressure that everybody wants back in, or everybody's building positions, or all corrections are done, is just going to lift it right off of that and prevent it from coming down. Now, other side of that is that it does continue to come down, and then we have 1.236 at 4,096, 1.382, which is a pretty strong, it's a very strong, excuse me, it's a very strong level to finish an ABC structure when the relationship is wave C to wave A. And that would be at 4,085. Now, 1.618 is a very common relationship as well. And that just happens to come in with, not this bar, excuse me, not this 100%. This is where wave C would equal wave A in length. And that's coming in at 4,066.25. And the 1.618 is coming in at 4,067. So that's where I think we're going to end up, down in this zone right in here. So, and that's all based on this new high to this low and that wave A. So I'm looking forward to extend all the way down. But we're going to trade what's in front of us. We're going to continue to look for the market to tell us where it wants to go and why it's going there. We don't, and based on Elliott and based on Fibonacci, we can only give you estimations on should this occur, then look for these levels. Should the opposite occur, look for these levels. So if this market continues to power higher, I just want to pull this down and begin to show you what we're looking at. So what I did is that intermediate wave 5 would be related, or Fibonacci wise, to intermediate wave 3. Now, a very low level intermediate fifth wave could reach 0.236 of wave 3 at 4,364. So now all of a sudden we're above that 4,300 level, which has been called across the board by many. 382 is 4,550. 50% is 4,600, almost 4,700. 618, which is the most common relationship between a fifth wave and a third wave, comes in at 4,846. That is a gigantic move from the level we're sitting at. And you have to, people ask themselves, well, what's going to propel the market to that high? I have no idea. But is it possible? Absolutely. In fact, the relationships tell you, and if indeed we're in an intermediate fifth wave, that's where I'm going to start expecting it to rise to. But again, we have to let the market back that up and tell us that's the direction that it's going. So right now, we have potential to upside, folks. Once this intermediate fourth wave correction is over, my expectations would be for it to zip up that high. And in fact, those relationships that I just gave you, those are based on Fibonacci extensions based on a drop to 4,067-ish. So this is important to bear in mind, that once this correction is done and wave 5 begins, that's where it's likely going to end up. 4,700, 4,800 when all is said and done. Now, granted that intermediate wave 3 took months to unfold. I don't expect intermediate wave 5 to unfold in the next couple of weeks. I expect wave 5 to take us likely through the summer months. But again, we're going to let the structure, the count, and the market tell us what its intents are, and then we can trade accordingly. So for tomorrow, I'm looking for some additional downside. Here are all our support levels coming off. They should only provide pauses, since we're looking for a minor C wave, actually a minute C wave, to come in and complete. Actually, I got these labeled a little bit wrong, folks. So, but actually we're going to leave it right here because of the size of an intermediate fourth wave, really should be bringing things back down here, 3,800. That's not happening. So possibly we got an A, a B, and a C, and that's all going to just be A, and then we're going to bounce around and continue to correct for the next month or so. So we have a lot of potential to go both ways. So we're going to take it day by day. Tomorrow, I am looking for lower levels. If it goes up and breaks above 4,186.50, then we should be finding some resistance at, I need to just, I'll put some on there. And retracements, that's on that. So I put that one back. Let me remove these extensions for right now and put in a new extension for the fifth wave up. And I'm not removing drawings, I'm adding drawings, excuse me. It's been quite the weekend here in San Francisco. So we want to now, actually, we're going to go up. I'm going to go this way. I'm going to put this. Come on, let's just do this. Well, let me just say that what we're going to be looking at is pretty much for 382, it's going to come in about 4,300. 1.382, which would keep it in an irregular. It's going to be about 4,300, and that'll get hit and still drop back down. So be aware, we have limitations. We will find 1.236 in between. So if you want to run your Fibonacci's for this final fifth, or for this final, or the continued run within this move, then we definitely need to place it. If I could get this thing to work, come on. All right, just, I'm just going to do it this way. Okay, there. I'm going to put that there. Jeez, I don't get why my computer just really wants to futz around with me. There you go. Let's put that there. So you can see that we're at least up to 4,200. So we've got resistance at 4,186, which it's already been. Actually, it's 4,201, 4,186, it's already been 4,201, then 4,216, then 4,222, let's call it. And that should contain throwover if it's indeed still within this ABC B wave. Okay, breaking above that, and we continue in 5 waves, correct in 3, and then head up in 5 again, then we're looking at the end of that correction, and it's off to the races. So that's our top side. We have our bottom side targets, and our next update will be tomorrow.